Okay, welcome everybody. My name is Gavin. Welcome to Alpha Chain's morning weekly brief. But let's have a look at the week itself. So if we come over to maybe look at the US equities for a start, maybe let's start with the Nasdaq. Look at the Nasdaq. This is the daily time frame. Let's look at the weekly time frame. You can see that's been quite bearish. Okay, so we've seen overall quite bearish from those prior highs. And if I now drop it down to sort of the daily time frame, the last time we formed a high was back on the 22nd of November. Okay, now being the 24th, we've just gone over a couple of months there, right? So 2 months in, and look at where we are, back at these lows of a hair, at a very significant support region. Okay, so we were once at a high of, just looking at the high, 16,771.6. Now, if we take and measure from the highest point down to the low achieved on Friday, well, that Friday was the low up there, it's about almost 14% sell-off. Okay, so we've seen a 14% correction taking place so far. Okay, that's an important factor, right? So generally, if I sort of outline, let me just outline that. I'm not sure if I can do this. Let's give it a go. Horizontal ray. Okay, so that point there, and then I also want to take it from the highest point, take it all the way down to just shy of that there. Take this. Yeah. So these are two significant levels. Okay, these are two significant levels. I'm not going to put too much emphasis on because it's not really a round number, but you can clearly see the 15,000 figure was pretty much close to that 10%, the first 10% decline that we've seen from the highest point that we reached back on the 22nd of November. So we've already passed the 10% correction level. We've almost had a 14% sell-off, a 20% sell-off. A 20% sell-off from the high takes us down to 13,422. Okay, now this is where you see this as a recessionary level. Okay, a recessionary level. Okay, it's more than a correction. It's more we're in a recession for technology stocks. Okay, so we're somewhere sort of halfway into this. Okay, but you've got to put a lot more emphasis on key levels. Key levels are, of course, very relevant. So taking down to these support regions, I might just include that prior low as well, which is what we've tested most recently. So we've seen a test in this region here. Let's put in a little up arrow here. So one test there, buyers coming in at that point. Again, buyers coming in at that point. And the question is, are we going to see buyers stepping in at this point? Okay, is this going to be that? I wouldn't say buy the dip opportunity because this is more than a dip, right? We are not, anything. Something that's seen as buy as a dip is if it remained above the 10% level here, but we've surpassed that. So is this where individuals out there that are investors, traders, investment managers, portfolio managers, whatever they might be, involved in the finance sector, are they looking at this as an opportunity to buy assets, right? Is this the time to buy in, or is this the start of, we might see what they call a dead cat bounce, a bit of a pullback until we get to a sort of a region where there's more sell orders that come in and we have another drive lower. Okay, that is the key question there. Let me just admit some people to the room. Yeah, so that's sort of the key level that I can sort of identify on the Nasdaq, whether what takes place in this upcoming trading session today and tomorrow will really outline what we could see occurring going into the end of the week. Okay, we might see a correction back up to sort of the 200 moving average. Okay, so if we're back up to the 200 moving average, but then we could sort of then see more of a drive lower. What we are seeing, and I'll probably show some stats on this a little bit later, is the retail market are cutting their positions. The retail markets certainly are not buying the dip. Okay, they've not been buying the dip for some time now. Okay, so has the view changed in the markets? Is probably sort of more relevant to ask, right? Is the market overall more pessimistic? We've got a number of agendas at this moment that is derailing the market, as we can see. So let's have a look at quickly. Let's look at the S&P 500. So the S&P 500. Let's take it from the high back up there. and to the low. Not quite correction levels yet, so close enough to 8.8% sell-off. So at 8.8% sell-off. Let's have a look at where the 10% will be. Is the 10% in line with the technical level? So let's have a look. So yeah, almost. So you can see sort of, 10% back down to this prior level support. Okay, so that will be the first corrective level. What we have seen is that we have broke through this 200 daily moving average. Okay, and it's quite significant. Just going back, I mean, the last time we had a sort of a real test of this was back in March. That was the initial sell-off, right? So the pandemic sell-off of March 2020. So we're just crossing through the 200 moving average at this moment now. The Dow, looking at the Dow, also through the 200 daily moving average. It's done that once before, right? So sort of early December, and that was due to the Omicron variant, but then it quickly snapped back above. So you can see strong bullish, or bearish candle, but the next one was bullish back above the 200 moving average. But we've now got, this is the second, right? So this is the second daily sort of close through this level. Looking at the high again from there down to the low, 7.5%, almost 7.5% correction. Well, not correction, you can say a pullback so far. Once it's above 10%, then you say that as a correction. So clearly, it's the tech stocks that is leading to the sell-off. It's the tech stocks that is leading to the sell-off. So what concerns do I have at this current moment? What are the key factors that you must be aware of for the week ahead? Let's bring up the economic calendar. Let me just bring that over. Let's bring that there. Right. Before we go into some of these agendas, here, we're going to put more relevance on high impact news, the ones in red. We've seen the London market open, and what I'm hearing a lot of noise around is the Russia and Ukraine situation. Okay, so we're seeing heightened tensions occurring at the border. And it's almost, it's almost imminent that there may be an invasion that could begin this week. And that is the biggest concern. So we've heard that the US have ordered the families of its diplomats to leave Ukraine as that rising fear of a Russian invasion is pushed Western officials to meet today in a bid to coordinate their response and compile a substantial amount of sanctions against Moscow, right? They have not given a detailed indication of what those sanctions are previously. In fact, I believe US President Joe Biden slipped up a little in regards to referring to that they won't implement many sanctions, but his administration quickly changed the tune there. But yeah, that was one of the key factors that is going to occur today, is that meeting. The other was that over the weekend, I believe it was on Saturday, the UK had alleged that it had information that Moscow was looking to install a pro-Russian leader in Kiev. So, tensions have soared in the most recent weeks, as we can see, as there's tens of thousands of Russian troops on the Ukrainian border, or along the Ukrainian border, and they're not just there alone, right? So they've got tanks, artillery, missiles. I mean, they're fully prepared for an invasion. Okay, and Moscow, they dismissed the sort of UK claim as disinformation and urged London to stop spreading nonsense. So to give you both sides of the view there. So this accusation comes at the end of an intense international diplomacy that had taken place last week, which didn't really conclude with any outcome. Okay, so I believe it was Antony Blinken and Sergei Lavrov. Those are your Washington and Moscow's top diplomats. They did agree to keep working to ease tensions, but with this news that have come out over the weekend, it just doesn't seem that they've made any leading headway. So, is a war on the Eurobloc imminent? Is the key question. Okay, is that what is going to occur this week? Now, so far, so in regards to the markets, how much of that has been priced in? I don't believe a lot of it has been priced in, right? And that's what's going to be reviewed this week. Okay, that's definitely going to be a key factor this week. And we already know that there's an energy crisis that's taking place in the Eurozone, and that is going to take place in the UK come April. Okay, how much of that is going to potentially impact those energy prices, right? So there's a sort of other concerns as well in regards to this Russia and Ukraine tension, which is almost on the verge of an all-out invasion war that is likely to occur. Now, I know that the Ukrainian administration have gone out and asked for UK troops to be allocated to their border. So let's see what takes place this week. It's a lot of geopolitical risk, right? And this is definitely high on the agenda. Okay, the second factor that I'm going to highlight this week is extremely relevant, and it's not on this economic calendar, is, of course, UK PM Johnson's premiership, as we've discussed many times before. So it's a big week in UK politics, but I mean, it's grown in regards to what's been occurring over the weekend, again, with a new allegation coming into sort of light. Okay, so Boris Johnson has ordered a Cabinet Office inquiry this morning into allegations by Conservative MP Ghani that was fired from her job as a minister because she's a practicing Muslim. Johnson moved after two cabinet ministers, both Health Secretary Sajid Javid and Education Secretary Nadeem Zawani, both called for a proper investigation to occur with this. So let's see. This is a claim against his chief whip, Mark Spencer, who denies, of course, the alleged remarks. This story has dominated the news wire over the weekend. It's likely to dominate for the upcoming few days. This is an incident that occurred, I believe, around 2 years ago. And this is only going to have a knock-on impact in regards to PM Johnson's premiership. Okay, so this week we're also going to find out Sue Gray's own inquiry into this Partygate scandal that we've heard so much about since early December. And this is likely it will determine Johnson's fate as PM this week. So let's see what comes to light in regards to this. Again, there is a real factor to sterling as well as the FTSE 100. So just be mindful of this as well. Okay, and I've already discussed some of the key factors. I might just come back to the charts again, just have a sort of highlight a couple of key points there. Now, Friday, we saw further sell-offs in the markets, and a lot of it was in the cryptocurrency markets. Okay, so we did see Bitcoin fall and break through that significant support level that we've held for some time, and this level was held from the 7th of Jan 2022 up until the 20th. Okay, and that's where we had the breakthrough occurring on the 21st. So Friday's sell-off really did break through that key level of support. We went on to test a low of just shy of 34, so just in the region of 34k. Since then, we've pulled back slightly, back up to a high of 36.5, and we're back down to those lows around 35 handle, close enough to the 35 handle. Now, this sell-off was largely due to the news in regards to Russia banning cryptocurrencies in regards to trading, but also mining. That's what sort of really drove the markets lower over Thursday evening into Friday, and we saw sell-off across the board in all crypto assets. Okay, I'll touch on that sort of some of the key fundamentals of what to be aware of and give you a longer-term perspective in regards to crypto assets. But hey, we're through this key level. The question is, where do we go from here? And I'll touch on that in a little while. There's a systemic risk across the board. Equity sell-off, cryptocurrency sell-off. A tough day in the office. But as traders, I mean, there would have been a lot of directional trades that you could have taken over that same period of time. If you're looking at the 15-minute time frame and the breakthrough occurring right through this key level support level, look how many opportunities we had pullbacks occurring. back up to even the moving average a couple of times before sort of reaching that significant low of 34K. Yeah, so look to take advantage and go in line with the trend direction. Okay, so we know that there's a crypto sell-off on Friday, but there was also an equity sell-off where there were quite a few stocks that had sold off substantially, and some of them were key tech stocks that had done so well during periods of the pandemic. Let's start off with, maybe let's have a quick look at Netflix. There, that is added to the list. There we are. So just looking at from Friday, where prices were, we take from the close up until the open, you can see a almost 21% gap lower. Hence why we don't trade individual equities, because of that gap, right? And that's why we don't encourage individuals to hold positions over the weekend in case a gap like this may occur from news. So yeah, I mean, the key factor from the earning report came out was there were less subscribers that joined Netflix, okay, less subscribers. And we just saw a huge correction occurring in the price of Netflix. That was also across the board, such as Peloton as well, all faced substantial headwinds. So, and earnings, looking at earnings is also a key factor going ahead, guys. So do monitor earning reports, as this is what's going to drive asset classes and the equity markets as a whole, as we hear more news in this upcoming week. We have more tech stocks to be focusing on. I believe Apple are releasing their earning reports, as well as Tesla. Tesla is one of the most traded assets from an option standpoint and from the spot market as well. So both Apple and Tesla's earning reports are coming out this week. Coming back to the macroeconomic view of the markets, well, today the emphasis is going to be on flash PMIs. Okay, we've got PMI data both for manufacturing and services across the board. Okay, global. So you've got UK, we have the US, the Euroblock, and so on and so on. So just be mindful of the PMI data that's being released. And then moving on to Australian inflation report coming out overnight. Okay, so we have the Australian inflation report coming out overnight. Just be mindful of that. Now, you know, I read a report over the weekend in regards to how Asia Pacific region are less impacted by inflation. Okay, Asia Pacific region have been less impacted by this, you know, overheated inflation levels in comparison to the Western society, okay, the Western world, right? So Japan, Australia, New Zealand, China, Japan, Taiwan, all these countries are facing less of an issue in regards to inflation. And the reports are suggesting, you know, they had less lockdowns, or they didn't go into a lockdown state, right? So there were less restrictions involved when the pandemic occurred, therefore there was less of a supply issue. And because they didn't go into lockdown, when the markets, you know, on the Western side did open, we saw a huge rebound and a surge in growth occurring, and that's not the case with many of those countries. Okay, so some of their macroeconomic sort of data is actually pointing to growth, but consistency in their growth rather than an overheated economy. So yeah, let's have a look at sort of the Aussie data that comes out overnight. Okay, moving on. Do remember there's still an Aussie bank holiday that is occurring. Apart from that, I don't think there's anything else that I need to be aware of until we move on to Wednesday, another important Wednesday. So Wednesday we have the Bank of Canada monetary policy statement and their rate statement to occur. Okay, so rate decision in regards to Bank of Canada. But at the same time, we do have another Fed meet. Okay, so it's very unlikely they're going to raise rates. Okay, so the assumption is they're not looking to raise rates, but what the focus is going to be on is their rate path tightening. Okay, so what is their forward guidance in regards to their tightening measures? Okay, so yeah, the statement and the press conference most certainly is going to be very important for the FOMC on Wednesday evening. Moving on from there, we do have GDP quarter to quarter on Thursday. And then at the end of the week, we've got some of the core PCE price index data. We've got a University of Michigan consumer sentiment report. So it's quite a sort of focus towards the end of the week. The most important would have been is, of course, this FOMC statement that's occurring Wednesday. Apart from that, of course, keep an eye on earnings. Okay, earnings will be an important factor leading into the week, especially in the equity markets, as we've seen those earning misses and lower subscribers are all having a knock-on impact into the sentiment of the overall market. And that's it for me, guys. There will be another session shortly where I'll cover a more deep dive on the fundamentals. In the meantime, if you have any questions, please feel free to send those questions over into either your cohort group or send it over to me as a DM. No issues. I'll get back to you soon. Yeah, enjoy the rest of the trading week, guys. Make sure you maximize the trading opportunities ahead. It is expected to be higher in regards to volatility, as you can see on the volatility index. Volatility index reaching higher with around the sort of 28 region. Okay, so just looking at the daily time frame, we have spiked higher. So where there's more volatility, there is greater opportunity. Okay, more volatility, it means more opportunity as well. But you don't need to take the same levels of risk when there's high amounts of volatility. So what I'll suggest is maybe starting the week a little bit slower, as we're a little bit undetermined in regards to what we're going to see and expect for the week ahead. So therefore, reduce your risk exposure. But because of the volatility, we're expecting the same amount of opportunity to occur. So where you originally were looking to target maybe 1.5, 2 to 1s, that might lead into a 2.5 to 3 to 1 in regards to the movement of price action in the upcoming week.